Listen, I need to tell you something that's going to absolutely blow your mind. What I'm about to share with you could change everything you thought you knew about XRP's true potential. And I'm not talking about some random YouTuber's wild prediction or another hopium-filled fantasy. I'm talking about BlackRock. Yes, the BlackRock. The world's largest asset management company with over $10 trillion under management just gave us a glimpse into XRP's real value proposition, and the numbers are staggering. But here's the thing that's keeping me up at night, and it should keep you up too. This information has been hiding in plain sight for years, and most people have completely missed it. While everyone's been arguing about whether XRP will hit $5 or $10, BlackRock's own analysis suggested something that would make your jaw drop to the floor. $32.91. That's right. BlackRock's head of digital assets, Robert Mitnick, didn't just throw out random numbers. This man did his homework, ran the calculations, and arrived at a high-end estimate of over $32 per XRP token. But before you start calculating your Lambo payments, let me tell you why this is both incredibly exciting and terrifyingly undervalued at the same time. See, Robert Mitnick isn't some random analyst making wild guesses on social media. This guy is BlackRock's managing director and head of digital assets. He's been with BlackRock since 2018, which means he's been watching the crypto space evolve from the inside of the world's most influential financial institution. But here's the kicker. Before BlackRock, he worked at Ripple. Yeah, you heard that right. The man who's now calling the shots on digital assets at BlackRock used to work directly with the XRP ecosystem. Now, when I first saw this analysis, my initial reaction was pure excitement. $32? Are you kidding me? Do you know what that would mean for XRP holders? If you're holding just 10,000 XRP tokens, you'd be looking at $329,000. If you've got 50,000 XRP, congratulations, you're looking at over $1.6 million. And if you're one of those diamond-handed legends sitting on 100,000 XRP or more, well, you'd be looking at generational wealth. But then I dug deeper, and this is where things get really interesting, and honestly, a little frustrating. This analysis wasn't published yesterday. It wasn't even published last year. This BlackRock analysis dates back to 2018, 7 years ago. Let that sink in for a moment. 7 years ago, when the crypto market was a fraction of what it is today, when institutional adoption was just a dream, when ETFs didn't exist, when central bank digital currencies were barely a concept. Even back then, BlackRock's analysis suggested XRP could reach over $32. Now, you might be thinking, wait a minute, if this analysis is from 2018, maybe it's outdated. Maybe those numbers don't apply anymore. And that's exactly what I thought at first. But then I started thinking about everything that's happened since 2018, and my mind was blown all over again. In 2018, we didn't have Bitcoin ETFs. We didn't have Ethereum ETFs. We didn't have the massive institutional adoption we're seeing today. Back in 2018, most traditional financial institutions were still calling Bitcoin a bubble and crypto a scam. Fast forward to today, and we have Fortune 500 companies putting Bitcoin on their balance sheets. We have entire countries adopting Bitcoin as legal tender. We have the largest asset managers in the world launching crypto products. But here's what really gets my blood pumping. XRP's ecosystem in 2018 compared to today is like comparing a bicycle to a Ferrari. Back in 2018, Ripple was primarily focused on cross-border payments with banks. Don't get me wrong, that was revolutionary, but it was just the beginning. Today, we're looking at a completely different landscape. The XRP ledger now has an EVM-compatible sidechain, which means Ethereum developers can easily build on XRP's network. We've got the Flare network providing smart contract capabilities and DeFi infrastructure. We've got Layer 2 solutions being developed that will make XRP even more versatile and powerful. We've got central banks around the world looking at XRP for their digital currency initiatives. And here's the part that should make every XRP holder's heart race. The supply dynamics have completely changed since 2018. Back then, there were billions of XRP sitting on exchanges. Today, we're looking at maybe 2 to 3 billion XRP left on exchanges. That's it. The available supply has been drastically reduced, and we're about to see institutional demand like never before. Speaking of institutional demand, let me tell you about something that's happening right now that could trigger the mother of all supply squeezes. Multiple XRP ETF applications are sitting with the SEC right now. We're talking about Bitwise, WisdomTree, Grayscale, Franklin Templeton, and several others all waiting for approval. The decision window? October 18th through 25th. That's right around the corner. Now, some analysts are projecting that if these ETFs get approved, we could see $5 billion flow into XRP in just the first month. $5 billion. At current prices, that would mean buying somewhere between 1 and 1.5 billion XRP tokens off exchanges. But here's the problem. There are only 2 to 3 billion XRP left on exchanges total. Do the math with me here. If institutional investors want to buy 1.5 billion XRP in the first month, and there are only 2 to 3 billion available on exchanges, what happens to the price? It doesn't take a PhD in economics to figure out that prices are going to explode upward. But wait, it gets better, or scarier, depending on how you look at it. The timing of these potential ETF approvals coincides perfectly with something called ISO 2022. Now, I know that sounds like boring technical jargon, but stick with me because this is where things get really spicy. ISO 2022 is the new global standard for financial messaging. Think of it as the language that banks and financial institutions use to communicate with each other when they're moving money around the world. The full global transition to ISO 2022 is scheduled for November 2025. That's literally next month. Here's why this matters for XRP. Ripple and the XRP ledger have been positioning themselves for years to be the primary infrastructure for this new financial messaging standard. We're not talking about small regional banks here. We're talking about institutions that process trillions of dollars every single day. Take Fedwire, for example. This system processes $4.3 trillion every single day, and it went live with ISO 2022 back in July. When the full SWIFT transition happens in November, we're talking about the entire global financial system upgrading its infrastructure, and XRP is positioned to be at the center of it all. Now, let me paint you a picture of what this could mean. When BlackRock's Michnik calculated that $32 price target back in 2018, he was working with a 25% probability of success for XRP. 25%. That was his estimate for the chances of XRP succeeding in its use case. But think about where we are now compared to 2018. Back then, Ripple was fighting an uphill battle to get banks to even consider using their technology. Today, major banks like BBVA, that's a 772 billion euro bank, by the way, are already using Ripple's technology. We've got Travelex and dozens of other financial institutions actively using XRP for cross-border payments. If Michnik was giving XRP only a 25% chance of success back in 2018, what do you think those odds are today? 50%? 75%? Higher? Because if we're being honest, a lot of the uncertainty that existed in 2018 has been resolved. XRP has proven its utility. The technology works. The partnerships are real. The regulatory clarity is coming. And here's something that's been bothering me, actually more like exciting me, about the current market conditions. We keep hearing about how there's not much XRP left on exchanges. Simon McLaughlin, the CEO of Uphold, recently clarified something really important. When you see these lists of the largest XRP holders, and you see exchanges like Uphold appearing to hold massive amounts of XRP, those aren't actually Uphold's XRP. Those are customer assets. The exchange is just holding them in custody. This means the actual available supply of XRP for institutional buyers is even more limited than most people realize. We're not just talking about a supply squeeze. We're talking about a supply crisis waiting to happen. Now, let me address something that some of you might be thinking. If this analysis from BlackRock is so bullish on XRP, why isn't the price already at $32? That's a fair question, and the answer reveals something crucial about how markets work. First, this analysis has been flying under the radar. Most retail investors have never seen it. Most crypto YouTubers have never mentioned it. The information has been there, but it hasn't been widely disseminated or understood. Second, markets are forward-looking, but they're also reactive. The conditions that would drive XRP to $32, massive institutional adoption, ETF approval, full ISO 2022 implementation, supply constraints. These catalysts are just starting to align now. Third, and this is important, markets don't move in straight lines. Even if every single bullish catalyst for XRP played out perfectly, we wouldn't see the price go from $3 to $32 overnight. Markets need time to absorb new information, for institutional money to flow in, for supply and demand dynamics to play out. But here's what's keeping me up at night in the best possible way. We might not have to wait very long. The confluence of events happening right now is unprecedented. ETF decisions in October, ISO 2022, full implementation in November. Supply constraints already in effect. Institutional interest at all-time highs. Regulatory clarity improving by the day. It feels like we're sitting on a powder keg, and someone's about to light the fuse. Now, let me talk about something that might sound crazy, but hear me out. What if $32 isn't even the ceiling? Remember, that BlackRock analysis was done in 2018 with 2018 market conditions, 2018 adoption levels, 2018 institutional interest, and 2018 supply dynamics. Today, we have tokenization of real-world assets becoming a reality. We have central banks exploring digital currencies. We have DeFi protocols being built on the XRP ledger. We have smart contract capabilities that didn't exist in 2018. We have layer 2 solutions and sidechains that make XRP infinitely more versatile than it was 7 years ago. If BlackRock's head of digital assets could justify a $32 price target with 2018 market conditions, what would that same analysis look like today with everything we know now? $50? $100? More? I know that sounds crazy, but let me put it in perspective. In 2018, the entire crypto market cap was around $200 billion at its peak. Today, we're sitting at over $2 trillion, and that's just the beginning. Institutional adoption is accelerating, regulatory frameworks are being established, and utility-driven cryptocurrencies like XRP are finally getting the recognition they deserve. But here's the thing, and this is crucial. None of this is guaranteed. Markets are unpredictable. Regulations could change. Competition could emerge. Global economic conditions could shift. That's why Michnik assigned only a 25% probability to his success case back in 2018, and that's why we need to be realistic about the risks involved. However, the risk-reward profile for XRP right now might be one of the most compelling opportunities I've ever seen in the crypto space. We're talking about a digital asset that's already proven its utility, has established partnerships with major financial institutions, is positioned to benefit from the largest financial system upgrade in decades, and is trading at a fraction of its potential value, according to analysis from the world's largest asset manager. Let me paint you one more scenario that I think is entirely possible. Imagine it's December 2025. The XRP ETFs have been approved and are seeing massive inflows. The ISO 2022 transition is complete, and XRP is processing hundreds of billions of dollars in cross-border payments every day. The supply on exchanges has dwindled to less than 1 billion tokens. Major corporations are starting to hold XRP on their balance sheets for treasury and payment purposes. In that scenario, what's XRP worth? Is $32 conservative? Is it just the starting point? Here's what I'm doing, and I want to be completely transparent with you. I'm not just holding XRP. I'm accumulating it. Every dip, every moment of market fear, every time people start doubting XRP's potential, I'm adding to my position. Not because I'm gambling, but because I've done the analysis. I've looked at the fundamentals, and I believe we're sitting at the beginning of the largest wealth transfer in crypto history. But here's what's really interesting about the current market dynamics. While retail investors are still debating whether XRP will hit $5 or $10, institutional players are quietly positioning themselves for much larger moves. They're not thinking in terms of 2x or 3x returns. They're thinking in terms of 10x, 20x, or even 50x returns. And why wouldn't they? If you're BlackRock and your own analysis suggests XRP could be worth $32, but you can buy it today for around $3, that's not speculation. That's strategic positioning based on fundamental analysis. Now, let me address something that I think is important. Some people might look at that BlackRock analysis and focus on the fact that Michnik also provided a low estimate of around $6. They might say, well, even in the worst case scenario, we're still looking at a double from current prices. But here's what I think they're missing. That low estimate was also calculated with 2018 market conditions and a 25% probability of success. If we're being honest about where XRP stands today compared to 2018, both the probability of success and the potential upside have increased dramatically. The regulatory uncertainty that plagued XRP for years is being resolved. The partnerships and use cases that were theoretical in 2018 are now operational. The infrastructure that was being built in 2018 is now live and processing real transactions. The institutional interest that was non-existent in 2018 is now driving billions of dollars in investment flows. In other words, we're no longer dealing with a speculative bet on whether XRP's use case will materialize. We're dealing with an undervalued asset in a rapidly expanding market. But here's what I find most compelling about this entire situation: the timing. Everything seems to be converging at once. ETF decisions, ISO 2022 implementation, supply constraints, institutional adoption, regulatory clarity. It's like watching a perfect storm form, except instead of destruction, this storm might bring the kind of wealth creation opportunities that only come along once in a generation. And that's what I want you to understand. This isn't just about XRP potentially hitting $32. This is about positioning yourself ahead of what could be the most significant shift in the global financial system in our lifetimes. XRP isn't just a cryptocurrency, it's infrastructure. It's the rails on which the next generation financial system might run. When I look at everything that's happening right now, the institutional adoption, the regulatory progress, the technological developments, the supply dynamics, I don't see how XRP doesn't succeed. The question isn't whether it will reach BlackRock's $32 target. The question is when, and whether $32 will just be a stepping stone to something much larger. Here's my final thought. And this is what I want you to take away from everything I've shared with you today. We're living through a moment in financial history that future generations will study and wish they could have participated in. The transition from the old financial system to a new, digital, programmable financial system is happening right now, and XRP is positioned to be at the center of it all. The analysis from BlackRock's Robert Michnick wasn't just a price prediction. It was a glimpse into the future. A future where digital assets aren't just speculative investments, but critical infrastructure for the global economy. A future where XRP isn't just another cryptocurrency, but the backbone of international finance. That future isn't years away. It's months away, maybe weeks away. And for those who understand what's happening and position themselves accordingly, it might just be the greatest wealth-building opportunity of our lifetimes. The $32 XRP that BlackRock's analysis suggested might not be a dream. It might just be the beginning.